Welcome to another episode, guys. Today we will be discussing the different types of strategies used by hedge fund managers. So let's get right into it. Hedge funds employ a diverse range of investment strategies, and the main types are as follows. So, hedge fund strategies. Number one. So the first type is equity-based strategies. So the first one is long short equity. Long short equity is the prevalent one used by fund managers. So that's the main type that's used in the industry, and that was what was originally used in 1949 by the founder of hedge fund managers, Alfred Winslow Jones, and it still today is used as one of the main types. And the next one is market neutral. So the positions, long short positions, are balanced, and that hence the term neutral. And the third one is short only. So equity based strategies, these are the three main types. Oh, sorry, there's another one that's long bias. So short only, and then there's the other one that's long bias. Market neutral, which balances long short positions, and then long short equity. So these are all equity based strategies. Number one. Let's go with the second type. Second type, I think we go with. Let's go with global macro. Now, if we were to break into these things, these aren't very. Some of them are quite complicated, but others are very simple. But it's structure. These jargons and terminologies are used in any industry just to sort of make it look more sophisticated. Instead of saying things in simple, plain words, we try and make it more refined and more complicated. And that's not unique to the hedge fund space. That's regarding all sophisticated fields have this sort of sophistication. Global macro, we have two main types. One is systematic and discretionary. Right? Global macro, systematic, discretionary. Global macro, basically, it's very self-explanatory. It means you're looking at global trends and the fundamentals based on that. Interest rates, inflation, currencies, geopolitics. And the asset classes, it's across bonds, equities, commodities, currencies, you name it. Okay, so first one, equity based. Second, global macro. Let's do the third one. Third one, let's go with global macro. And then you can just say event driven. Okay, event driven, you're looking at mergers, distressed, and activist investing. I'm just gonna write it down for you. So merger, you could say arbitrage. Cool sounding word, arbitrage. Let's say debt Okay, distressed debt. Distressed debt. And the third one I said was what? Activist investing. This is the style. Activist investing is one of the styles that Bill Ackman uses, rightly or wrongly, but you can use or abuse these types of strategies. And you could also add one more here is credit. Long short. Right? These are all event driven. So if there's mergers, there's distressed debt, or you actively invest in funds and you get into the meat of the companies, and credit long short. That's to do with the mispricing in capital structures. I don't want to say too many technical terms, just want to give you a layout of the just a brief description, because going into details, if you don't know about it, it'll just sound complicated. So we'll try and just whiz through this part. And then the fourth one, let's go with, since I was speaking about arbitrage, let's go with arbitrage as the fourth one, right? Arbitrage, you could just say you try and try and figure out the relative value. And you try and take advantage of the discrepancies in values. Pricing discrepancy. So the main types are convertible arbitrage. Let's just use short form for this. Let's say ARB. And then you have convertible, you have, what else you have? You've got the fixed income. Fixed income. And then the capital. Capital structure. Okay, so these are the arbitrage strategies. And then let's go with number 5 here. Number 5, credit strategies. The two main types, how would you say? Let's say distressed and structured. Credit strategies, two main types are distressed and structured. Okay, you can just go number 6 here. Go with quantitative systematic strategies. And these types of strategies use mathematical models, algorithms, machine learning, to identify patterns and execute trades based on that. So, these guys also use the types. One of the type is high frequency trading. So whenever you hear high frequency trading, that's what we're talking about. We're talking about a quant systematic strategy in hedge funds, and high frequency trading falls under this type. You got high frequency, you got AI or machine learning, and then you got the quant equity. Alright, that's the 6th type. Let's quickly move on. Don't want the video to get too long. And one of the final ones, let's see the space here. Yep. You got Managed futures and CTAs. So let's say this is number 7, managed futures and CTAs. Okay, so managed futures, the two main types would be managed futures. How would you say? Could say trend following. Futures markets kind of trend, so trend following is one of the major ones that you would use, and I kind of use a mixture of trend following and pattern recognition to identify trading opportunities. So trend following is, since I trade gold, which is the futures market, the COMEX, and which would fall under this category, but I also use discretionary method as well. So, and this one, because my challenge on this channel, if you go to the other videos, you'll see I'm trying to turn $10,000 to $2 million, and that's a retail system. And so short-term strategies are also quite common, short-term in the future space or the commodities trading advisory space. And so the last one is, these are all specific strategies, but the last one combines multiple different types of strategies, so they're not bound by one type of strategy. You could call it a multi-strategy. Multi-strategy can combine, say, number 7, number 1, or 2 and 6 can use different type of strategies within the same fund, so they're not bound by the one strategy. And that's basically all the different types of strategies, guys. Going back again, multi-strategies, 8 managed futures or commodities trading advisory, global macro, equity-based strategies. You got event-driven, arbitrage, credit strategies, quant, systematic. So if I've missed any, please list it in the comment down below. Which one am I using? I'm using a combination of basically, you could say I'm using the closest strategy. It's trend following and discretionary trend following strategy, and it's based on so the strategy in simple terms could be described as pattern trading at statistical extremes. That's the strategy I use, which again, it's it's based on identifying trend. It's a discretionary strategy and a pattern recognition style of trading. So that's it, guys. These are the different types of hedge funds. Hope you learned something. If you did, make sure to hit the like button, and I'll see you guys in the next video. Thanks for watching.